A lot has changed since last time, so let's have a look at my entire investment portfolio. Hello there, welcome to another video. If you enjoyed, hit subscribe. Any questions or suggestions, drop a comment. So you're going to have the tickers of the stocks in the red, name of the company or ETF, the sector it's in, when I bought the stock, and then how big of a percentage it makes up of my entire portfolio. Now keep in mind, I am adding cryptocurrencies this time, so this is the percentage of the entire portfolio, not just the stock part. So I'm going to start off with my biggest holding. It's going to go this way, biggest to smallest, is Activision Blizzard, the world's biggest video game company. And the only reason I invest in this company is because they make the best video games. End of story. Amazon, and I promise you, I didn't just go alphabetically and buy all the stocks beginning with A, but for some reason my four top holdings all start with an A. So we're going to have Amazon. The reason I like this company is the CEO, the big growth, and the fact that it's an e-commerce company, and I think e-commerce is the future. And I was lucky enough to buy the company quite early on when it was about $290. It's now at $1,240 or something. And I bought Activision at about $19. Then we're going to have Apple. It's such a safe stock, and they have such big leverage with the iPhone and all their devices. And they're making more and more money from other things than the iPhone. They have a strong brand, very good margins, and very good pricing power. Alibaba is sort of the Amazon just globally, and especially in China. It's the biggest retailer in the world, so to speak. It's the biggest e-commerce player, at least. They're expanding outside of China. They're making a lot of money. And the CEO is also a visionary. Alibaba does a lot of other things than e-commerce. So they have high growth, makes as much money as they want to, really. And they're just trying to keep up with the demand. Then we have the robotics and AI ETF, BOTZ. I think this is maybe the best industry to be in right now, artificial intelligence and robotics. And this is an ETF, which makes it pretty safe. And yeah, I really like that ETF. Sorry if you can't see the percentages, but I'll show you in the end. Then we have Taketwo Interactive, like the third largest video game company or something. They make pretty much the best video games, second only to Activision Blizzard. Great CEO, and they have so many good titles, and they can release new games for these titles every year. They have so many cash cows, but really high quality. It's not like EA that just throws out shit games all the time. These are really high quality video games, such as GTA and Red Dead Redemption. Then we have the first bank, JPMorgan, very stable bank, very high dividend. They did so well during the financial crisis, and they're still like the safest bank. They score the highest on the banking stress test, 2% dividend, I think. So this is my favorite bank, and the economy is recovering, and the interest rates are going up, and banks are going to benefit from that. The Chinese tech ETF, QQQC. I love China. I love tech. What's going on? I love China, I love tech, so this is the ETF to be in. It also pays about 3% dividend, so very good ETF. It's a little bit expensive, but I think the dividend weighs up for that. Lithium ETF, LIT, bought it 2017. Most batteries do contain lithium, and we're going to need more and more lithium, especially now as China is starting to produce more electric vehicles than the rest of the world combined. So lithium, I can only see the demand going higher, and since this is a commodity, you're not buying actual lithium, you're buying the lithium miners and refiners, but it is sort of like buying lithium, because as the demand for the actual lithium goes up, this stock price goes up. So it's pretty much the same, and you can't buy lithium. So Lockheed Martin, my military stock, they make the best fighter jets. They also have very good missile systems. It's a massive company, very stable company, and stable stock price. pays 2.1% dividend or something. It's the largest aerospace and defense company. They're also into drones and unmanned aerial vehicles, so I really like this play. Intel Corporation, they make semiconductors, so they make most of their money from chips which run computers. It's a very safe company and pays a ridiculous dividend of 3%, I think. Quite a small position, but just a really good tech play for the global tech space. Nvidia, sort of the same thing, just they make a little bit better chips than Intel. It's a bit more of a risky stock, but their chips are at the moment the best. So for now, I think this is one of the best tech plays. For example, all the robotics and AI, they run off the chips from Nvidia. Waste Management, it's the world's largest waste management company, operates mainly in the US. They have contracts for like New York, they do massive landfills, pays a 2.4% dividend, very down to earth, great CEO, and this is probably the safest company in my entire portfolio. Domino's Pizzas, probably the best performing and executing pizza company. They are very good at using technology to sell pizzas, and they're truly a global company. It's almost as global as you can be. So this is not just a US play. Bitcoin ETF, there's not much to say about that. It's just like buying Bitcoin. So if you're not comfortable with buying actual Bitcoins, you can go with this one. This is a Swedish ETF, so it's not available for everyone. Then we have Vanguard, small cap growth, VBK, bought it very early on, pays like at least 1.5% dividend. This is of course, small cap companies tends to grow a little bit faster than the big ones, and these are small cap growth companies. So companies that are growing at 20, 30, 40, 50% a year when it comes to revenue. Square Inc. is a payment company, sort of like PayPal. Very up and down stock, very volatile. I'm kind of regretting buying Square and not PayPal, because since Square is such a risky stock, I only invested like almost nothing, just a couple of $1,000. And if I went with PayPal, I would have invested a lot more and been a little bit more, felt it's a little bit more of a safe and stable investment. And then I have 12% in currencies. So I'm 88% equities, 12% currencies. And this is also in the order, I think. I have quite a bit of Bitcoin, some Ethereum, Litecoin, Monero, Ripple, Tron, Basic Attention Token. These are ridiculous shitcoins. And then Stellar. So the only ones I know anything about is Bitcoin, which I think is like a store of value, sort of like gold. Ethereum is a resource, it's not a currency, so it's like oil. Litecoin is trying to be a currency. Monero is a currency, but it's an anonymous currency. Ripple is also trying to be a currency and is working together with all the big banks. Tron is like an entertainment sort of platform. Basic Attention is the same. And then Stellar, I think, is also trying to be a currency and work with banking. So what do you think? I've bought a lot of stocks in 2017, and that's just because I'm getting more and more money, and sometimes I take profits from my top ones and buy some of the smaller ones. Going into 2018, I would say definitely that the top 5 represents the stocks that I'm the most confident in. And if I could pick like 3 stocks to buy, it would probably be the BOTZ, Alibaba, and then maybe Activision Blizzard or something like that. There are some dividend, but I have shifted more towards growth stocks such as these 2 on top and Alibaba. So let me know what you think. How does your portfolio look? Are there any of these companies you're interested in? If you have any questions, just drop me a comment. And that's about it. I'll see you in my next video.